What is a dividend and what kind of money can be made through dividends? As we all know, shareholders are part owners in the company. So whenever a company goes into profits, it sometimes decides to distribute it amongst its shareholders. And this distribution of net profits or profits to its shareholders is also known as dividend. Now, a couple of things to keep in mind when it comes to dividend is that first, no company has got an obligation to give dividend to its shareholders. So every year company takes a call on whether to give dividends to its shareholders or not. And obviously not all the profits are given away as dividends. Basically a small portion of net profit is distributed as a dividend. Now usually if a company is profitable, only then will they give a dividend. So that's why whenever a company that you see is giving consistent dividend, the indirect analysis of that is that the company has been profitable for a long period of time. Now, a lot of times companies do not give dividends, but when they give, they usually give an annual dividend. But some companies which are consistently profiting may also give it on a quarter to quarter basis or half yearly basis, which is known as intermittent dividend. Now, the biggest question is that what kind of money can be made from dividends, or is it okay to buy stocks to expect a good income from dividends? So the answer is that the dividends will always give you really small return on stocks. If you are buying and selling a stock at a higher price, then you get capital gains, which can be from 5%, 10%, 50%, even 100 or 200% in a year. But if you are buying a stock and getting its dividend, then usually it is less than 1 to 3% on your total amount of investments. For example, very recently Mahindra and Mahindra gave its dividend where the stock was trading somewhere between 900 to 940 rupees and the dividend that they gave was 7.5 rupees. So that is less than 1% of returns that you got on the amount of money invested for a period of time. Similarly, Infosys, which was a stock trading at 1400 rupees, gave a dividend of only 10 rupees. Again, it was less than 1% of net returns on your total invested capital. So if you're going to be blocking money just to expect dividends and make a lot of money from it, then dividend is not your ideal strategy. The biggest advantage of dividend is that, of course, the interest or the dividend that you're making will have no tax on it up to 10 lakh rupees. So within a year's time, if your total dividend collected is less than 10 lakh rupees, then you'll be paying no taxes on them. Ultimately, you must remember the dividend money that you're getting will be always credited directly into your bank account, which is connected to your Demat account in which you're holding your shares. Hi, I hope you enjoyed the video. If you would like more information related to stock market investing, then we have made 20 videos which answer the top questions most beginners ask when they're starting to invest in the stock market. To receive all 20 videos free in your inbox, simply visit capitalize-pune.com or click on the link below and give us your information and you will start receiving those videos right away.